Look at my margin account. Look how clean it is. Just look at it. Just beautiful. All right, let me go through the trades I made today. So if you watched my previous videos, you know that I talk about doing a credit spread on the SPY, same day expiration, so expiring the same day. Usually a put spread 3% lower than the open price. So today the SPY opened at 257, if I remember. Yeah, 257. Where's the open price? There we go, 257.84. And as I was trying to do a put spread, I realized that there wasn't enough premiums. If I had to go, I had to get really close to the current market price to collect decent premiums. Before, when I was selling on the same day, I was able to go quite far and collect at least $60 out of a 5-point spread. So I wasn't able to do that today. So what I did is I did an iron condor. I let the market play out a bit. And when the SPY was trading at around 260, I did an iron condor with a 263 call and a 257 put. So that means I need the SPY to close between 257 and 263 for me to keep the full credit that I collected opening this trade. So I'm gonna show you the trade here. Executed SPY. Let's filter on SPY. All right, so April 6th expiration. So you could see it is this trade over here. I opened the trade for $109. It was doing well. I think at some point I was able to close it for $70, but I was waiting for more profit. And then when the SPY got tested at around 263, I panicked, of course, and I didn't do anything. I didn't sell it. I didn't close the trade, sorry. I didn't buy it back, but I waited. And when it dropped back down to 262, I closed the trade for $81, as you could see here. So it was a small profit at the end of the day, but I'm pretty happy I closed it because look where the SPY is trading right now. At the end of the day, it reached 266. So that call spread of the iron condor would have been in big trouble if I had kept it. And it closed the day at 265. So I'm glad I got out of this trade. My plan was, as soon as it hits 263, I'll close the trade completely and put on a new trade with a range around the current market price of 263. So I would close the trade for about the same price that I collected, and then I would sell a new trade or sell a new iron condor at around, let's say, 260 put with a 265 call. Collect whatever I can collect. That'll help mitigate the cost of closing the trade that went against me. I didn't do that. I just ended up closing the trade completely for a very small profit, and I'm glad I did. So I don't know if same day expirations work now with the VIX getting lower, premiums getting lower. It might not be that easy to sell SPY credit spreads with same day expiration unless you get close, or unless you stick to puts. I realized that for a while now, if I had just done puts, I would be winning every time. It seems like selling puts on the SPY, even with same day expiration, has a better chance of winning. So I did close 2 put spreads on the SPY today. So last week I went back to my 30-day SPY put spreads that I was doing. So every Monday, Wednesday, Friday, I'll sell a put spread on the SPY, and with a different expiration, of course, 30 days out. And then whenever I have a chance to close any spread for 50% profit, I close it. If a spread goes against me, meaning if the SPY drops and it gets breached, then I'll start selling call spreads against that put spread to mitigate the max loss, to reduce the max loss. But as the SPY is dropping, I'm selling a new put spread the next Monday, Wednesday, or Friday. So that next put spread that I'm selling has a better chance of winning, and I'm able to collect more premium from it because the SPY is dropping, the VIX is higher, so volatility is higher, so premiums are higher. So let me show you the put spreads that I closed today. So May 1st, this had an expiration of May 1st. I had a short put at 215. So pretty far from the current market price. I think the SPY was trading in the 240s when I opened this trade at a 215 strike. Initially, I had collected $90. As you can see on this line here, I collected $90 to open this trade April 1st. I closed it today, April 6th, for $40. So a bit more than 50%, $50 profit actually. Very, very effortless. And what's great about it is once I have enough capital in my account, I could scale it. I could do 2 contracts instead of 1 contract. So with the same effort, instead of making a $50 profit, I could have made $100 or even $500 if I had done 10 contracts. So that's what I like about this trade, is that it's very scalable if you have the capital, of course. I'm still starting off, so I'm doing one contract because I got burnt. As you know, if you've been watching my videos, I got burnt when the SPY dropped in a historical fashion. I had a lot of put spreads open on the SPY and a lot of contracts as well. I was doing 3 contracts instead of 1 contract, and every time the SPY was dropping, I kept selling another one. So even the new one I was selling ended up being a loser. I did mitigate some of them by selling call spreads against them, but overall they were all losers. All right, so from April 1st to April 6th, that was one put spread that I closed. And then April, there's another one that I open here. I think it's right over here. There we go. So April 3rd, I opened another one with a May 4th expiration, but a 220 strike, collected $80. I closed it today for $40, I think, with like 5 minutes to go when the SPY just flew in the last 5 minutes. I was able to close that spread for 50%. So this one's a $40 profit. So this one was opened April 3rd, closed April 6th. The expiration though is 30 days. I was able to close it in 3 days. So that's what's great when the market goes up. Put spreads are amazing when the market goes up, but when you drop, there's a way that you have to manage it so that you don't lose as much. And anyways, most of the time we're in a bull market. And what I like about out of the money put spreads is that the SPY could still drop a little bit. It just can't crash. But if it drops a little bit, the trade could still make you money. Anyways, so I opened a new one today with a May 6th expiration, but this time I have a short put at 230. So, we're getting closer. That's because the SPY is going higher. So my short put this time's at 230, but I'm still 35 points away. But I'm 30 days away as well to close this trade. But if the SPY continues to go up and as time goes by, I'm able to close this trade for a profit. This time I collected $75 only. As you can see, the previous times I collected $90, $80. This time $75, so I'm going to try to close it for maybe $30. So it might take some time depending on what's going to happen with the SPY. I hope we drop a little bit. I don't like going up this fast. I sold a lot of positions for a loss just so that I can start buying some interesting stocks, but everything's going back up again, so I feel like I missed out. And remember my American Express dividend capture trade? I ended up closing it today. So I ended up coming out with a $100 profit after commissions with this trade. Could have gotten more actually. As you can see, American Express went to 83, 84 today. But I sold a call option. I did a covered call at 75 strikes. So my max selling price becomes 75. I did that Friday, end of day. And now Monday, I didn't know that American Express was going to jump to 82, 83. But if I didn't sell a covered call on Friday, I could have sold American Express for $80 today. Would have made $400 profit instead of a $100 profit. But regardless, my intention going into this trade was just to capture the dividend and get out. I ended up holding the stock a few days longer than I wanted, about 3 days. Came out on top with $100. But I don't think I'm going to be doing this again because it's not that fluid, it's not that smooth. You might end up holding it more than you expect to. And as you could see, it gets a little messy. And not all stocks have enough premiums to give you downside protection when you sell that covered call to begin with. So this is what I'm left with in my margin account. I've got a SPY put credit spread at a 230 short put, expiring May 6th. And these are 2 old SPY put spreads that I had that went against me. And I tried to manage by selling call spreads against them. So they ended up becoming iron butterflies. They're going to be closed for a loss for sure, but not as big as anticipated. This one expires in 2 days, and my short strike is 260 on the put and the call side. So if SPY actually trades April 8th around 260, I can actually make a profit on this. So the closer it is trading to 260, the better it is for me. See, right now I can close it for $4. So max closing price for this is $5. So I can save about $100 if I close it right now. But I'd rather wait the 2 days and hope that SPY trades back down to 260. And maybe I can make a big profit on this trade actually. At this one here, 240, this one I think is going to become a loser. I'm going to have to spend $5 or $500 to close it. But of course, I've collected premiums on the way. So it's probably going to become maybe a $200 loser or $150. Depends how much premiums I collected on the way. I would have to calculate how much I collected. But I think I collected at least $2.50 or at least $250 in premiums with this trade here. But I'm gonna have to close it for 500, so I'm gonna lose 250 overall. So that's my margin account, and I plan to keep it this way. Just SPY put spreads every Monday, Wednesday, Friday. That's it. So in my TFSA, as you can see, I'm cleaning it up. I still have IMGN and CHK that I'm trying to get rid of, but I'll get rid of it as soon as I can. So I'm trying to fill up on the Qs. So you can see my average price right now on the Qs is 221. I actually bought it initially at 232. So I bought it a few times when it dropped. So right now my average is 221. I've got 134 shares, but my plan is to sell covered calls every week out of the money. So today I sold a covered call on it at a 199 strike. But when I sold it at 199, the Q was trading at 190. But then it decided to move 6 points intraday today. And right now I'm not sitting in a great position because I'm only 3 points away of getting my strike in the money. And I only collected $40, and right now it's trading for $2.18. So I would have been better off if I had waited a bit and then sold the call option after. But of course, I don't know that I had no idea of knowing that it was going to go up. It had already gone up from Friday's close to today's open, Monday's open. So to me, that's a good jump up. I sold a call option at a 199 strike, which it was 9 points away from the current market price when I did it. But yeah, now this is the position I'm in. But who knows? It expires Thursday. I've got 3 days to go. Who knows? Maybe the Qs will drop back down. But regardless what happens, I'm going to keep the shares. I'm going to roll the call option. I'm going to buy back the call option and then sell the next week's call option a little bit higher, of course, at a higher strike, hopefully for a credit. If I have to do it for a debit, I'll do it for a debit because I don't want to lose the shares. But at least in the long run, the more I sell call options out of the money, most of them will expire worthless. And who knows, maybe I could sell, let's say, if the Qs reach 199 tomorrow, I could sell a call option at a 205 strike for next week, so expiration April 17, and maybe collect a 30-cent credit there. And then by next week, maybe the Qs will drop, because if it goes up, it's not going to go up every day, 5 points, 6 points every day. It has to slow down or come back down a little bit. So I did the same thing in my RSP. I'm trying to clean up. I'm going to keep DFN and IWM only. I'm doing covered calls on IWM as well. So my average cost on IWM is 151. But since the stock is trading at 112, I sold a call option on it at 118. When I sold the call option today at 118, it was trading at 110, but then it went up and now it's trading at 112. I collected $26, but now it's worth $77. So I could have collected more. So it's the same situation as the Q, but of course I didn't know that it was going to go up. But I still have about 6 points to go before this option becomes in the money, and I've got 3 days to go. So this one's safer. This one's a little bit safer than the Qs, because I don't want IWM to be trading above 118 come April 9th. But if it is, I'm going to buy it back because I don't want to lose my shares. And then I'm going to sell the next week's call option at a higher strike. And hopefully I could do the combined trade for a credit. I do have some capital left over in my RSP because I sold a bunch of things for a loss. I plan on buying I'm thinking about it. Either I'm going to buy some more IWM, or maybe I'm just going to buy some shares of McDonald's, Coca-Cola, some of my favorite brands, maybe Visa, MasterCard, just hold them. And I'm not going to have enough to do 100 shares, so I can't sell covered calls on them, but it would be for the dividends. In my RESP, I have a bit of MasterCard. I've got 6 shares of MasterCard. Average price $275. Today it closed at $265. So that's actually getting close to my cost. I've got a covered call trade on Dell. I like Dell. So got 100 shares of Dell at 39.66. Right now it's trading at 38.91, so close to cost. But I've been selling covered calls on Dell. I've sold maybe 3 times or 4 times and collecting premiums on that. My strategy or my plan with Dell, or my intention with Dell, is to keep it forever, but to generate some sort of dividend from it by selling call options on it. Although this 40 strike is pretty close of getting surpassed by April 17, but even if it does, I'll just buy it back and sell the next month's call option, either at the same strike or a higher strike. Dell doesn't have weekly options, it only has monthly. So I'm always going to have to take April 17, May 15, June, whatever, 17. But Qs and SPY, and most of the stocks have weekly options, so it's easier to manage and roll your call options if they have weekly expirations. And the SPY actually has three times a week expirations: Monday, Wednesday, Friday. And I'm definitely gonna get rid of Bombardier when I get the chance. A little disappointed though, because I don't know if the market's feel like I missed out on buying stocks for cheap. Didn't buy as much as I wanted to. So I don't know if we're going back up now and never coming back down again, or is this just a small rally but then more surprise to come? Who knows? We'll see. But I've got some capital this time, so if we drop, I'm ready to buy. So more put spreads on the SPY in my margin account, because I don't actually want to use the margin or the borrowing power of Questrade, because it's 8% interest. TFSA will be all Qs and just doing covered calls on the Qs weekly, out of the money covered calls on the Qs. RSP will be covered calls on IWM and a few dividend stocks. And my RESP will be a covered call on Dell and a few dividend stocks as well. But it definitely feels good cleaning up my portfolio. Looks much better this way. Less stressful, only quality stuff. I'm basically just investing in the general market. The Qs is all the tech, big name techs: Microsoft, Apple, Intel. IWM is all the small caps. I would love to own 100 shares of the SPY, but I didn't get the opportunity. I could potentially do it in my TFSA actually, because I've got about $18,000 buying power in my TFSA. If the SPY drops back down to 230, that means I would need $23,000 buying power. If that happens, I could probably sell my 34 shares of the Qs and just buy 100 shares of the SPY and do covered calls on the SPY. This time every Monday, Wednesday, Friday. All right, let me know what you think of my portfolio right now. If you have any questions, leave them in the comment section below. Let me know what you think of the trades I made on the SPY today as well. Thanks for watching.